welcome. Gio and I are here today with Arian Lewis, CEO and co-founder of Kiln, which is a premium co-working brand and one of my personal favorites. And I was just saying to Arian that he and I have spoken very briefly at conferences, but have not had a good, get into it kind of conversation. So thank you, Gio, for setting this up.
Well, you're in for a very welcoming treat because he's got an incredible background.
Yeah, well, I did a little prep research today and was watching some YouTube videos, so I know a little teeny bit about his background, which I didn't really know before this. Arian, where are you zooming in from today?
I'm calling from Lehi, Utah.
Okay.
So right along the Wasatch Front, I have beautiful white mountain peaks right off in the distance in front of me.
I love this time of year where we have a cabin in near Lake Tahoe. And so we were there for the weekend and I drove back last night. And it's like that gorgeous time of year when there's still snow on the mountains, but then there's, things are green, just like the juxtaposition to me is so fabulous. Anyway,
Yeah, it is.
mountains.
I love this time of year too.
Yeah. Is that the closest to your location to your home?
It's not actually. Closest location of my home is Kiln, Provo.
Okay.
Where I currently live and I'm from. But yeah, but this is a central spot for us all to meet.
Okay, cool. Perfect. GM, do you want to jump in? You look like
No, it's all you. You're excited.
Okay, I
You
am
did all the
excited.
prep work.
Just a little bit of prep. Okay, well, I would love to hear this story because you grew up in Utah. You've
Yeah.
been out and about and done some very compelling things, a very interesting journey. And now it's sort of circling back and you're home based again, but expanding rapidly into other markets. Can we just get the short version of the Arian story?
The Arian story or the Kiln story are combined?
I would combine, give
Okay.
us a little background, Utah, then,
Sure.
what, and then how did
Sure.
you, what brought you back home? And, Kiln will be merged into that story. And then we'll go from there.
You bet.
Yeah, so I think that the part that I love the most is your background in co-working and how it led to Kiln is the really cool part about it for me. I had no idea about that until you and I had dinner together.
Yeah. Okay, great. All right. Well, just very long story short, grew up here in Utah, was raised for the most part by a single mom. She was an entrepreneur as well, ran a school,
Wow.
and was always very encouraging of sort of creative outlets. And I built a spaceship simulator when I was a kid, took 3 years. So I had a lot of freedom to do interesting things. Fast forward, I went into real estate after college and worked in sales in retirement housing, but it was for a brand called Del Webb. And they built these beautiful retirement communities where you had tons and tons of amenities, but you really bought a community and you got a house with it. And so later on, after 8 years in that industry, I went to school in England and I got an MBA. And while I was studying for that MBA, I took a course on real estate investment. And the professor had been hired to do a research project on how to revitalize the high streets in the UK. So I'm living over there, I'm studying real estate. And the solution that we came to was that retail shops would become shops where people work. And we researched co-working operators, including WeWork, which at the time had only a few locations, and other operators, especially an operator called Central Working out of London, and a wonderful founder named James Layfield, who was truly very visionary, really deeply understood co-working very early on. So I got to know James. I did a startup called Tech Capital. We built a platform for IP to be shared across from universities to mid-cap public companies. We took that company public on the London AIM market, which is a sub-market of the London Stock Exchange. And around that time, there was a natural point at which I could exit the company, and I got hired by Barclays. And Barclays hired me for a very specific job, which was figure out how to merge the world of Barclays, which is a 326-year-old British bank, and the world of very young fintech startups. Okay. So we had this problem, these very different cultures. You could bring a startup into Canary Wharf, which was, high, tall glass buildings, and they'd come into a boardroom and all of the bankers would sit there with their suits on and kind of judge these guys in t-shirts with this concept of like crypto, which was very early days. And we realized we needed to actually build a third space. We needed something where the two worlds could merge. And we built a co-working environment, which at the time had a name that I'm a little embarrassed to say, but it was called the Escalator. Now, at that time, we thought that it was a good idea. It was not a good idea, but we had an accelerator, we had an incubator, and we wanted a third thing called an escalator. So we did this thing and it confused everybody. We did create this really great space in London in an old department store, and we partnered with Central Working. So we partnered with them. The designer who did all of their work is now the co-founder of Kiln, Lee Radford. So that's where Lee and I met. We never contemplated, even throughout that whole journey, we never contemplated doing something big together afterward. It was more that we respected each other's work. We enjoyed working together. That journey lasted 5 years. So we built a first location in London. It was the home of fintech. We had early brands and companies that now become very large: Everledger, Chainalysis, Ethereum. There were some amazing clause match, amazing companies that came through that. We then got remit to build these locations like this all over the world. And the original plan was to do 20 of them, but we rebranded as Rise. So think of it going up an escalator. We just changed that to Rise. And we built Rise locations in London, New York, Tel Aviv, Cape Town, South Africa, Mumbai, India, Vilnius, Lithuania, Manchester, England. In addition to that, we took a variety of bank branches, and we did the first prototype where we took a bank branch in Oxford, England, little bank branch, and we converted it to a co-working space for the community. This was not for fintech. This is kind of separate.
Okay.
Barclays had 93 bank branches that were sitting vacant at the time across the UK. And we kind of came up with this concept that in these small towns, we could turn those bank branches into co-working spaces, not really to make money, but actually just to have good, positive community impact. So that kind of took its own route, and about 20 of those locations launched, okay? At the same time, I was focused on Rise, and Rise had a whole programming element, which was an accelerator. In four locations, we did that with Techstars. In a few locations, we did it on our own. And then we had a variety of internal, external innovation programs, hackathons, various kinds of programs to help Barclays innovate new solutions or products and services with startups. So I actually was, at that time, more of an expert in open innovation as a practice. And Barclays was truly leading the way for the whole world, and especially the world of finance. We were the best. And alongside all of this, we did co-working. And the really interesting thing was doing it across so many different cultures and cities. So Mumbai, very big city, but had very, very little culture. Very, very little co-working. Lots of culture, little co-working, very little co-working. Tel Aviv, on the other hand, and New York and London were very mature co-working markets, especially Tel Aviv, which had over 50 co-working spaces when we entered. And in many cases, we partnered with a local co-working operator. So in Tel Aviv, we partnered with Mindspace, which, if you know Dan Zakai, and he has an amazing story. I did Dan when he had 2 locations. So I had the benefit, and then we also partnered with a co-working operator in India. So I had the benefit of learning from and observing these different co-working operators, in some cases completely independently doing our own thing, in other cases collaborating, like with Central Working or with Mindspace. And so that was a 5-year journey to sort of, I didn't start that journey intending to build a co-working brand on the back of it, but it was very useful and we learned a lot. And I think, look, co-working is still very young, but at that time it was extremely young. And so people were really trying to figure it out. Everybody was looking at WeWork and seeing their tremendous growth, but also were cautious about quickly following their model. Some did follow their model, but others were a little more careful, and that's worked out for them. How was that? Was that helpful?
Yeah.
I apologize.
That was
long-winded.
perfect.
I agree.
So I think
That's
at
incredible.
what point, I'd say at what point did Kiln come around, and how did you bring it back home, I guess?
And so I started that 5 years in London. So I had gone from living in Oxford, England, then moved to London, and then moved to New Canaan, Connecticut, but really worked in Manhattan. So at the end of that journey, I was living in Connecticut, working in Manhattan, traveling 2 to 3 weeks a month, constantly on the road, because we were, building and operating these programs and locations across multiple continents. Are you getting any background noise? Are we okay? Okay, good. So while I was living in Connecticut, there came a point in time at which it became obvious that either I needed to really double down on Barclays or I need to figure out my own thing. I didn't own any of Rise. I did lead Rise. I was basically leading Rise, but I didn't own any of it. And I was also traveling a lot. I have 4 children, and that meant I was home very little. So part of the reason for moving back to Utah was personally motivated, but the other part was that Utah was undergoing a real exciting kind of growth in the tech ecosystem. The first couple of unicorns had come out of Utah. Utah has a very similar bedrock culture to Israel, I would say, in that it's very supportive of entrepreneurship. Entrepreneurs are celebrated here. There's a very healthy seed and Series A venture ecosystem, a little more challenging when you get to B, C, and D, but that early stage funding really strong. And we hit it just at the right time. So came back in 2017, saw the potential for co-working to exist. And before WeWork or Industrious or even Regus had really made a big entrance into Utah, Regus had some locations, but not spaces. We launched here. Now, within 6 months of us launching, WeWork built 5 locations. Industrious launched a location. Spaces went in across the street. So we then began competing head to head with the bigger brands, but we were the first. So, and then from there, we've now grown meaningfully. We, of course, had to get through the pandemic first, but yeah.
And was your first location the downtown Salt Lake location?
Yes, it was our first location, although we launched a Salt Lake and a Lehigh location within a month of each other.
Okay. Wow.
So Salt Lake was at that time 30,000 square feet. Lehigh was 48,000 square feet.
Okay. And I'm curious, you mentioned, sort of the influx of significant competition in a smaller market when you launched. Did that impact your plans to kind of move to the suburbs, or was that always the plan?
We saw the trend coming of co-working and lifestyle needing to merge. So being in a place where people want to live, not necessarily in the CBDs or the downtowns, which, WeWork and Industrious were heavily focused on CBDs. And we're really glad we didn't go down that path. Our most urban location is actually Kiln Salt Lake, even to this day. So yes, it did. It was competitive. We had a really good local ground game. I actually think that the choice was helpful. So everybody was, those other brands were also educating the market on what co-working was. And we were entering a market where most people did not know what co-working was or why they would go to co-working versus a traditional office. And even to this day, our main competition is not from co-working operators, it's from the traditional office. So I think in some ways it was difficult, in some ways it was very helpful.
Yeah, interesting. Okay, Gio, I have many more questions, but you may dive in.
Yeah. Thank you. I appreciate it, man. So 48,000 feet, that's a pretty significant number to start with. So let's talk about kind of where, obviously you had an incredible background. It's not like you randomly came up with that number. You obviously felt comfortable enough with it. Was it based off of the size of the other spaces you were doing across the globe? Or was it because you saw the demand, or the space or the building dictated it? Kind of how was that due diligence done?
Sure. So with Rise, most of our locations were anywhere from 15 to 25,000 square feet, and there were a few that were larger, 30 or 40,000 square feet. We learned pretty quickly that the economics of co-working and being able to offer a good high-touch hospitality model within your brand, it does require scale. Now, we have made it work. We actually have 3 locations in California that are about 5,000 square feet each, and we've made that work. It's under very unique circumstances, I will add. But generally speaking, you need to be above 20,000 square feet to make a model that has a higher level of hospitality work. I will side note that I had come to that kind of general conclusion myself. In fact, I was going after much bigger spaces, but I couldn't get the money for them. So, but I did go meet with Adam Newman before starting Kiln.
I would love to have been a fly on the wall in that meeting.
Yeah. I met with Adam a number of times, and this happened to be at a party. And I just sat down with him. I said, look, I think I'm going to go start something in Utah. And he's like, tell me about what you're doing. And I said, I'm going to do XYZ. And he said, I think you really need to go larger, because I think you're going to find your economics are going to be challenging at that size. And he was like, 40,000 is the number you got to really focus on. And now we've seen many, many examples of great operators that operate with less than that, more than that. Sometimes that can be very challenging in certain markets to have that much square footage. But he was generous, and my experiences with Adam were always positive. And in that case, he was also, positive and encouraging.
Yeah. So, I mean, as far as you just mentioned going and finding the money. So did you bootstrap it? Did you go out and get investors? Was it like kind of lending? I mean, kind of what was the environment to get to that?
Didn't borrow any money, because even to this day, very, very difficult to get debt. But yes, raised equity. As you know, these are cash hungry things to build. And so, yeah, required raising equity. And that's what we did. Yeah. And we've raised a meaningful amount of equity over the course of the last 5 years, 6 years, really. And that's what generally funds our locations. Mm-hmm. Usually that and a combination of tenant improvement allowance.
Right.
Well, so speaking of, I know you do creative deal structures. I've seen videos of ground up builds. What are your real estate structures, and what are your preferred structures?
I would just call us very opportunistic. So
Love it.
We have some structures. Well, let's just talk at a high level. So if we all understand that co-working or flex office in the United States is less than 2% of office space, and if you come with a belief that demand for flex office is going to grow exponentially like it has in London or Tokyo or New York or other markets where we've definitely seen the demand for flex office increase. London being a great example. I think 14% of office space in London is currently flex. Then you know that as a landlord or owner of real estate, that you can actually get more upside if you participate in the joint venture, rather than if you sort of just take a very traditional tenant approach to this. Because one way to think of it is that a great operator is just leveraging the landlord. That's all a great operator is doing, is just getting leverage out of the landlord. A great landlord is getting leverage out of the operator. And what that means is a great landlord understands that it's about placemaking, it's about experience, it's about lifestyle. And if you partner with the right partner, you can get much more out of your real estate. So we have deals where in most cases we are partnered with the landlord and they are participating in the upside of the location. In some cases, we're bringing some capital with us. In some cases, we're actually going through a process of doing due diligence on a building, buying the building with the landlord or the owner partner, and participating both in the revenues as well as in the underlying ownership of the real estate. So I would say we're very creative, but we're very clear about where we can be successful and where we will not be successful. And so our growth is very focused and disciplined.
Yeah. As you said early on, we work a lot of deals to get one deal done.
Yeah, a lot.
Where do you think the discipline comes from your unusual experience sort of in the industry before you did your own?
I suppose so. When you operate in large markets like New York or London or Tel Aviv or Mumbai, there's a certain level of rigor that comes along with that. And I would also say when you do that from within a bank like Barclays, where let's just say the underwriting process is very detailed.
Yeah.
Yeah, you have high expectation for the level of information and the level and your understanding of the risk that you have going into it. Kiln is very, very, very focused on investor and partner returns. We measure on a monthly basis the cash on cash return to everybody that's participated in Kiln, whether it be a landlord or another investor. We know that sort of the lifeblood of this company is it comes down to delivering a very solid return to our investors. And we do. I mean, last year across our locations, we averaged a 17% cash on cash return, which is very good in the world of real estate. That's not including other benefits that came to owners of real estate that we were participating with.
Okay, so I'm curious. I mean, this is very interesting and I think so useful. I mean, it's such a good example how your background really shaped how you think today. Because to your point, even right, the rigor of being in the underwriting process at a bank, which, you know, there's so many owners who maybe show up and have never seen a P&L, right? But this is what they want to create, and you'd been through the process. So, but like having been through that rigor, how did you decide to go premium? Because you're one of the very few premium brands in the marketplace. And you know you're investing in your build out at a very significant level. How does that fit into the strategy? And I'm dying to know how you get those returns with that investment in the build out.
Mm-hmm. Yeah, well, a couple things. Our build out looks more expensive than it actually is. Part of that is that we have invested. Lee, my co-founder, is really a remarkable product designer. And he came from that background. He was a product designer by training and background. We have 27 different products right now that we design and manufacture ourselves. So in behind Geo right now in this video, you've got bookshelves, desks, panels. All of those they're designed by us, and they're manufactured by our partners, and we're not charging any kind of markup or something like that when we put them into a location. So we're saving a significant amount of money on the build out because we've gotten very clear about what adds value.
Yeah.
How we kind of differentiate our product through our unique product sets, and I don't know of any other co-working operator that actually claims to have like a whole series of products that they own, they continuously develop and design. That's something that makes us unique. And as a part of that, we have a whole logistics operation. So we're manufacturing in 13 different countries, which is challenging at the moment. And we have a whole warehouse and a whole team that manages all of those logistics. It's complicated.
It sounds complicated. Okay, the Malin might be in that, yeah. And they're also premium and beautiful and fabulous.
Even more premium, certainly more premium.
Yeah.
A smaller format model and more of a club model. Now, you asked the reason why we went premium, and part of it is in order to attract top tier corporates and tech companies and Fortune 500 companies. So Kiln has HP, Aflac, Bain. We even have Caterpillar, tech teams for Caterpillar. We have, the Fortune 500. We have all the way down to your individual creative. We wanted to be able to address a larger market. And in order to do that, we had to build the kind of quality that would be a reasonable exchange for somebody from a top tier tech company or a top tier corporation.
Yeah. I mean, do you know Kane Wilmot? He runs IQ Office in Canada. You
Yes.
probably encountered him. Similar model. And although he picked urban CBDs, like his strategy is opposite of yours in location, but same, like I'm going to go premium and attract Fortune 500, and more than half of his leads come from brokers. Like his is just a different customer, and that works really well. That's really interesting. And the product design piece, I mean, I've only been in two of your locations, but like your meeting room in the lobby in Park City is so, I mean, it's so memorable. I mean, I feel like I can still picture it in my mind just, from having been there.
Yeah.
And that's part of your secret sauce, right? Is the ability to create something so compelling. And
Yeah, we really have a very dedicated and and very impressive design team.
yeah,
And Lee, I would put Lee in the top in the world. He's like a brother now. He's lived it with my family, on and off for the last couple of years. Now he lives in Utah, but he is a remarkable individual with tremendous talent. And I think that his unique talent set combined with what we are trying to do as a company and the unique capabilities we built is really unmatched in some ways.
I pulled the Jamie. That was the first time in a long
I
time,
know.
Jamie. So talking about your team, I mean, you mentioned earlier the high touch, high hospitality. I mean, you've got an incredible team. I've interacted with them not only at the spaces I've been in, at dinner we had together, but also at the conferences and stuff like that. But why don't you talk about kind of your team, the overall hospitality that you guys high touch that you go after?
Yeah, it's so complicated, isn't it, to get an operating model figured out in co-working. You usually find that most co-working spaces have anywhere from 2 to 3 to 4 or 5 team members, depending on the size. And then organizing those teams and getting them focused on specific things, still very much a work in progress at Kiln as well. We have individuals that have world-class experience in hospitality, coming mostly from boutique hotels and resorts. We also have ex-employees of WeWork and people that have been in the industry for quite some time. Kiln has roughly 120 team members right now. And there's a few values that really are consistent across the team. We're human-centric. We are nothing short of extraordinary. We achieve and we celebrate things together. We're very, very focused on the details of the way that things work and on the personal touch and the human element. So the way that we look at somebody and the way that we smile with them, they know that Kiln cares. And our teams really do care. It's very authentic. It's not or engineered. It comes from a very natural giving place. They are wired to want to do this work, and they really do care about our members. And I could tell you beautiful examples of the way that they've touched the life of somebody. But, for all of us, work is where we spend a significant amount of our life energy and time, of course. And it should be uplifting. It should be caring. It should be something that creates value in our personal lives as well as our professional lives. And I think our team members are very dedicated and committed to that idea.
Yeah, I mean, I think it's one of those situations. I mean, you're almost like, help me understand this better, like how your elevator spiel, because the time I've spent specifically, I'm going to use Boulder as an example, is you have a large communal kind of membership area. I think once we start having discussions about it, you're membership based. I mean, I tell people for the most part, co-working as people define it with a membership model doesn't work. It's private office oriented as far as density and all those things. But with the amount of memberships that you're driving, I mean, you made the comment that Malin is a social club, but you've got, in my opinion, a variation of that as well. And so you kind of want to talk about that?
Sure. You are correct in that it is less straightforward to make money from co-working versus flex office. And only about anywhere from 10 to 20% of our revenue comes from co-working memberships, if you want to put it that way. We have introduced we have two levels of that membership. One is called Kiln Access. That's $49 a month. It's 2-day passes, and then you can add additional day passes as you go, along with additional meeting room credits. And then club membership, which is usually anywhere from $250 to $450 a month, depending on the location. Comes with us some meeting room credits and 24/7 access. And then we have a resident desk, which is a dedicated desk. Most people would call it a dedicated desk. We have a minimal amount of that, probably less than 5% of our revenue in most locations comes from resident desks. The really wonderful thing about co-working members or club members is that they bring a different kind of attitude to community than, say, a web user. And they are the magic of what actually makes kind of the fabric of Kiln special. And if you go without that, then you don't get the buzz and the mixing and the true gelling of your community the way you may want to. It is more complicated to make it work, but if you can make it work, it can be magical for your community.
So how much of that is, you managed to get away this long, Jamie, but how much of that is based off of your faith and your family values and just your overall beliefs is part of that overall hospitality and desire to give back?
Well, I would say that both Lee and I believe in democratization of that we want it to be democratized. We want people to have access to it. We don't want the barrier to be a financial barrier. That's why we introduced the Kiln Access membership, which is $49 a month. And of course, if you get a private office, you're paying at a different level. But yeah, I would probably say it's somewhat values informed, but it's also good business. Yeah. It's good business because if you create a space, pardon me,
Bless you.
create a space that is just private offices, you're going to have a space that really lacks for areas where people congregate. It lacks for diversity in your member base. I would say that Kiln is a very design-centric business, and we don't want everything to be a closed office. In fact, if we could do it any way we wanted to, we would probably love to do it more like Malin, which is really very communal, and hats off to them for what they're doing. But I think that our markets demand a variety of different products, and we're actually constantly innovating on our product set. We've introduced multiple different kinds of products in just the last year. And in each market, we kind of look at what that market really is best suited for, and we customize our solution to that market.
I was just going to jump in and say, I also think this is where the scale comes in, right? Because, I mean, with the scale, there are fixed expenses that come with that, right? Like you're paying rent on every square foot that you add, but the scale allows you that diversity of product. Right. And to have some meaningful flex area that delivers on the design and the Correct. Community piece. Because if you have a smaller space, you probably have to be a lot more judicious about how you're, monetizing each square foot maybe a little more seriously. So
yeah, even on our small locations like in Solana Beach, Carlsbad, and Encinitas, we have created that variety. And kudos, we actually those spaces came through an acquisition. Our first acquisition where we acquired Block Coworking. Great operator, and they had already intuitively done that. They had kind of we came in and kind of changed a few things and uplifted the design to a small degree, but they had already settled on a model that was similar.
So you mentioned you've got 4 kids, right? What ages?
I have an 18-year-old, a 16-year-old, a 13-year-old, and a 10-year-old. A boy and then 3 girls. Yeah.
Oh, wow. And so if each of those was to say one thing they love about you, what would it be?
I would say they're all going to say something about like dad does fun things and is always up for an adventure. And we have had some great experiences traveling together because we lived abroad for close to 4 years, and we we know that it's easy to kind of sit in a bubble where we live. And so we've made a real deliberate effort to get out. So this year I went to Kenya and Morocco. Kenya with two of my girls, Morocco with one of my daughters. My son is currently living in Colombia. He's an LDS missionary out there. And so he's doing that. So we think that getting out of our world is good for us. So
That's awesome.
what do you think is the most important thing that's going to happen in the world of co-working in the next 12 months?
Well, in the next 12 months.
I think enterprise is going to continue to buy in, right? And you've already mentioned you've got a bunch of enterprise. I've had conversations here recently with people in Europe and Asia and Australia, and obviously you've done a bunch of that. And just London specifically, right? They're so far ahead of us from an overall buy-in, from landlords, buy-in from the enterprise, that I think we're going to continue to see that. I think as interest rates come down, I think the market's going to open up a bit. But as of right now, the word office is a bad word to a lot of investors and lenders at this point. So I think that's going to soften a bit, and there's going to be more understanding of kind of where we're headed.
Cool.
It's a complicated time in the market, I think, because I think enterprise, I think your positioning in the market is smart. And I wonder if we'll see, I don't know. 12 months is not a lot of time in the co-working world, as you know. That's why, it's giving me some pause because, even pursuing deals can take more than a year, right?
Yeah.
So that's why your pipe,
8 months to get a deal done for sure.
Right. So, did you say 8 or 18?
It can take 18.
Yeah, exactly. So that's what I think what will happen in 12 months. I do think there will be a movement towards more premium brands potentially. And I love that you have this secret sauce. You said, well, it's not, as expensive to build out as it appears. So, but the market, I was having a conversation about this with John Arenas at the Juicy conference, and he said, his sense was that there's a lot of competition in the middle, which makes sense. And he said, the more casual user is maybe staying home. And I'm sure if we end up in a recession, we're going to see that. And I think your brand, and this is not about like why you're great, but I think in the market in general, how about brands that are focused on hospitality and experience they'll have to be. They're the ones who will attract the folks who might otherwise cut it out of their budget, right? Go back home, cut the $250 a month, but then you're cutting out this community, this experience, this important, part of your life. But if the space doesn't deliver on that, it's not that hard to cut that out, right? And go back home to your kitchen table. And at the higher end of the market, as Gio said, more enterprise and companies looking, even if it's, on an on-demand basis, meeting room, gathering spaces, looking for, to your point, what looks like what we can offer, but better and more compelling, but at that sort of, high-end offering where they're comfortable to deliver their employees. So I think we'll see, a little bit more playing into that, higher end experience and maybe more scale. Although it's a really tough time, as you said, it's very difficult to secure debt. The SBA is not lending against co-working right now. So operators have to be really creative and opportunistic, to use your word. So I think it's going to be a challenging year for, newer operators, and they'll have to really be creative about how they get started and really intentional about how they fit into the market.
That's great. Anything to add, Gio?
No. Well, I'm curious what yours is.
Yeah.
There are some really interesting trends. I think it'd be very interesting to see how consolidation in our industry works over time. In the UK, we've seen a number of property developers, landlords start their own brands. Like my good friend Grant, who runs Grosvenor's House, has their own internal brand. The acquisition of Industrious by CBRE could set off, there could be a little bit of an arms race where JLL or these other brands, which do have solutions inside of their brand, but they don't have something with the strength of the Industrious platform,
Yeah.
which is very
Yeah.
strong. Obviously, Jamie's going to go and he's going to revolutionize property management in general. He's very, very exciting. And yeah, I would say that ground up co-working is a very novel concept. We have just launched our second ground up build where we designed the building from the ground up. Very, very unique and novel thing. We are now working on a few other ground up builds where we will, in partnership with larger developments, so big multi-use developments, we're designing our space from the ground up. That's very interesting because it will really give flex and co-working, in at least in our case, a very unique and distinct advantage over traditional office. I think the final thing is that when there's uncertainty in the economy, tariffs, policy changes, that makes it really challenging for a company to sign a long-term lease, especially when it comes with young employees that have the expectation of good quality workspace, great amenities that cost a lot of cash up front. And so I think to Gio's point, I think you're totally right, Gio. We'll see a continued influx of corporations and enterprise businesses saying, you know what, particularly in our satellite offices where it's not our main headquarters, but in our satellite offices, we don't want to take on the long-term burden of a lease. We don't want the upfront CapEx cost of building out a space. We would rather go to a high quality co-working flex office operator where our teams will be happy, but we won't have as much of a cash burn up front and a liability on our books. So those are really interesting things. I think uncertainty in the economy drives demand for flexibility. So I'm feeling especially optimistic that demand for flexible office will increase because it will be harder for people to predict what's going to happen in the future of the economy.
I'll have what he's having. I like it. Actually, it's really helpful because I sort of get really stressed about the uncertainty and it making it harder to start. But I think you're right. Uncertainty will drive demand for flex. So we're going to go with that. And then if you're well positioned in the marketplace, have a great brand and deliver on experience, which co-working can still do better than any traditional office space. Cool. I'm going to go with that lens. Okay, Gio, we need to wrap up. We have another guest after this. Final question.
I don't have a final question. I just want to say it's amazing what you guys are building, and it's been fun to watch and see, and excited to see the final touches on. I saw your design team post the latest build, and I sent that to Jamie. So I think it'll be fun to see the next iterations of Kiln.
Thank you. Yeah, Las Vegas just opened this morning.
It's awesome.
Yeah, it's funny. I took my daughter's 13, and we went to Vegas for a couple of days for her spring break. Long story, she had a gymnastics competition, but I was getting ads for it on my phone. Yeah, I love it. Yeah, and thank you for taking the time to share your story and to do this. You obviously have a lot on your plate, a lot on your calendar, and so it means a lot when, I can tell, you're a great fit for the industry. You have an incredible background and also just a willingness to share and connect, which is wonderful. So thanks for doing that.
Thank you. Very kind. Thank you very much. And grateful for all of the education and free education that you do across the industry. It's really incredible. You two have been in this a long time. You really know our industry, and very, very much appreciate how I've been able to listen to the podcasts you've done with other operators. So thank you.
Of course.